The real headline that we've seen is the fall in pre-tax profits growth. In the 2024 edition, it was around 13%. This year, it's close to 3%.
Fragmentation is the watchword in global banking. Running a profitable bank looks pretty much the same in many ways across the world, but running a highly successful bank is increasingly dependent on overcoming local issues, as well as attitudes towards risk. This is what emerges from the banker's latest stocktake of the industry, our exclusive analysis of the largest 1,000 banks in the world. John, our senior editor, has gone through the data. What are the main takeaways, John?
Well, it's very, very interesting to see this year, Silvia, in terms of the sort of like the three big metrics that we sort of track at the sort of like top of this rankings. You have assets, you have tier one capital, and you have pre-tax profits. Now, all three of those have actually seen lower growth than we did in last year's rankings. But the real headline that we've seen is the fall in pre-tax profits growth. In the 2024 edition, it was around 13%. This year, it's close to 3%.
So a big difference, but within that aggregate number, there is a high variance.
Very much so, yeah. And I mean, you talked about fragmentation, and that's really clear to see this time around. So you have the US banks, which are really kind of riding the crest of a wave when it comes to the sort of the Trump election at the end of the last year. The investment banks in particular benefited enormously from the election and from the optimism that came out of that.
A lot of good things are happening for our country. Please sit down.
There was a lot of non-interest income that they generated at the end of the year. And so the US, in terms of kind of the major banking markets, has seen the kind of highest increase in pre-tax profits. 190 or so banks from the US that are in the top 1,000, they had an aggregate of about 17% increase in pre-tax profits for the year. And then you contrast that with the other two big markets around the world. You have China, of course, and then you have sort of Europe in terms of Western and Central Eastern Europe. Within China, you have the sort of the four big state banks. They still are kind of sitting at the top of our rankings in terms of kind of the largest in terms of tier one capital. And you have kind of some other kind of growers within this ranking in terms of China Merchants Bank making a good show and sort of increasing its position in the top 10. But then when you actually look at beyond the assets and the tier one capital, when you get to the profits side of things, you actually do see that the Chinese banks are actually struggling somewhat in terms of their pre-tax profit. This comes down to the sort of dynamics of the Chinese market. You have a long-standing real estate crisis, which is really pulling as a massive drag on the economy, and the government has been doing many, many things to try and stimulate that and help out the banks. But then the banks are kind of seen as one of the main drivers of economic growth, and they're being lent on in a big way. You've seen interest rates come down significantly, and I mean at a much faster rate than you've seen in the Eurozone and within the US. And so that's had an inevitable impact on pre-tax profits, which are much lower and I mean for many of the big banks have been falling throughout the year.
So clearly China and the US are two very, very different banking markets, yet they are two of the largest banking markets in the world. And the US and China, of course, are also at loggerheads over trade, as we well know. Chinese banks, the largest ones, at least may not be as exposed to the consequences of this trade war, but smaller Chinese banks, as we know, may be more exposed to those issues, as well as other banks across the region.
Indeed. I mean, when you talk to analysts, you actually say, they've been saying the sort of the larger ones, kind of just the sheer size of them, and I mean particularly focused, not exclusively, but overwhelmingly on the domestic economy, they're unlikely to be too impacted by the sort of the reciprocal tariffs regime and also the other measures that Trump has put in place. Where there is a bit of a question mark is some of the regional banks, some of the rural banks, some of the city banks, particularly kind of focused in sort of certain sort of export sort of oriented geographies, which have a high concentration of risk when it comes to sort of the tariffs being put on them. So it's going to be very interesting to see kind of throughout the year and beyond how such banks are going to be impacted. And then within the wider kind of Asian Pacific space, analysts have been sort of sounding the alarm about certain sort of banking jurisdictions, particularly South Korea, Thailand, Taiwan, and Vietnam. Fitch Ratings has recently put those banking markets on notice and saying the outlook is deteriorating for them as a result of these tariffs.
Sure. So US banks are doing well from a profitability point of view. Chinese banks and Asian banks are looking at changing global markets. What about Europe?
Well, it's very interesting to see Europe just kind of the other sort of the big banking market there. You do have European banks who are still represented towards the sort of the summit of the top 1,000. They're still there. HSBC in particular is holding its ground up there. And then you have the French banks and sort of other banks from within the Eurozone. The largest banks within the rankings are starting to sort of slip in terms of their positions compared with their compatriots within sort of the US, within sort of China, and also within other geographies such as, India and Japan. This is kind of as a result of a number of things. You have a sort of a weaker economic outlook within the Eurozone in particular, and within the wider continent, both, in Western Europe and Central and Eastern Europe. Within the Eurozone, you had the ECB cutting rates earlier than the Fed. So we've seen net interest income at the European banks falling, or the growth much slower than it is elsewhere because of that. And then just generally the sort of, when you have a kind of a weaker economic outlook and weaker economic environment, you don't have the same growth that you do in places like, China and particularly in the US.
Of course, and there is typically a very different attitude towards risk and slower reaction times within European banking markets, which have kept them away from the progress that their Wall Street peers really have.
It is, yeah. It's the story that sort of keeps on kind of developing and keeps on going, really, just in terms of the contrast between the European banks and their US peers. And so, the data in this year's rankings really kind of shows the stark difference between the two.
All right, thank you, John. You can find more about John's analysis, our top 1,000 ranking, and data about banks' performance in the July edition of The Banker, and of course on thebanker.com.